Okay, welcome. We'll start our lesson. So today we'll go through LO4, understand how an organization its fixed working capital, which I go through. So often start lesson a bit. First lesson one, we learn about accounting system where we discuss about transaction, book of prime entries and financial statement. Then 1.2 we discuss about sole trader, 1% business partnership, 2 and more, up to 20 and limited companies. We discuss about private and public limited company. Then we discuss about the private sector is the private investor, and the public sector is organization owned by the government like the BBC, NHS. And then we discuss about financial software. We mention and we discuss about Sage, accounting software, and we discuss about other software like a Microsoft accounting we can use for recording the business transaction via these software. Then LO2, we discuss about entry bookkeeping based on the debt click. We use the word what goes on the debit side like asset, expenses, and drawings. And then what goes on the credit side, we discuss income, liabilities, and capital. And then discuss about VAT. VAT normally two types, input VAT and output VAT. Input VAT, which we can get the refund from HMRC. In the UK is called value added tax, in other country called GST, general sale tax. So VAT on purchases we can get the refund from HMRC, and VAT on sale we supposed to pay HMRC. So one is a asset, one is a liability. So one we can get the refund as a receivable, and other is a VAT on sale we have to pay to HMRC. Then we discuss about prepare the cash receipt and the cash payment and bank reconciliation during our lesson, where we discuss about the bank book and the cash book balance need to be balanced between each other. We discuss about the cash receipt and the payments. So then next lesson, the lesson 3, we discuss about trial balance. I have two sides, a debit and credit side. All the ledger balances need to be balanced in the trial balance. Then we discuss about prepare statement of comprehensive income, which is also known as a profit and loss account, where we discuss about how we can prepare statement of comprehensive income, which shows our profit or the loss for the period. Then discuss about prepare statement of financial position, where we discuss about financial position, also known as a balance sheet. And we discuss, financial statements show the asset, liabilities, and capital, which I mentioned, your accounting equation all goes in the statement of financial position. We also prepared the statement of financial position as well, and I already uploaded and sent you the handout as well. Hope so will help you. So then next today lesson we'll go through the sources of finance. We can get the money from, and how we can use the money effectively, and how we'll make the decision to get the best source of finance. And the second 4.2, which will go through the reason for budgeting and budgetary control, and then we'll try to prepare the cash budget. So that's all will be today. So start. What we know about the working capital? Thought about working capital?
No, it's basically the
Okay, so working capital is known as a running capital in the business, like inventory, like stock. Cash itself is also called working capital. Like in one of lesson we discuss about current asset. Current asset means short-term asset, the asset which we can use for 12 months. So those assets is come under the working capital. So current asset minus current liabilities. Liability is legal obligations. So this is also known as a working capital cycle or working capital. So like trade receivable days, trade payable days, and inventory turnover days. So these all come under the working capital. So we need to be manage working capital. So it means the assets those are near to the cash, we need to manage them effectively. So that's about what. So next, one which we'll go through now, 4.1 is classify the types of sources of finance which we need to for a business, the way in which the business raise the capital. So capital is mean the investment, how we can raise the capital investment in a business. There are the number of ways we can raise the finance, which those required for the business. So was trained funding alternative is open to the companies or new development occur every day. Before really, not your example, but we need to examine available sources of fund. We need to look around the criteria. What criteria will use? Cost. If we'll borrow money from the bank or we'll issue shares to the public. So which one is the cheapest source of finance? So what do you think if we'll borrow money from the bank, how much normally the interest rate will be approximate?
That's right. I just say around 15%.
Yes, if we raise the funds from the bank can give us around 3-4% depending upon our credit scoring. Okay. So we need to think about, so if we raise the finance from the bank is the cheapest, but if we'll issue shares to the public, so they are shareholder expecting at least 10 to 15% return on it. So we need to make sure we have but only the issue if we have a lot of we borrow money from the bank, if we can't afford it to pay back them, so we'll be really at risk.
Mm-hmm.
So we need to make sure we'll use the right mixture of, we use some debt financing. Debt financing is known as the money which we borrow from the financial institution, and equity means the shares which we the public. So normally we need 60% debt and 40% equity, because that is cheaper than equity, but we make sure we can afford it to pay back. But in terms of the shareholder, if we can't afford it, of course the shareholder are the owner of the company, so maybe they can wait as well. So that's we need to look around. But the debt is considered as expense for the company, but the share is considered as an investment in the company. So that's why we need to look around what are the tax benefit as well, because of course if our profit decrease, we don't need to pay the tax to HMRC. So all we need to look around which option is best for us. Okay, duration. Then we need to look around the duration, how long really we need a money. So finance can be arranged for the various time period. It can be normally it can be invariable, or can be long term, or more expensive short term, or like overdraft facility normally is expensive than the borrow money for the long period of time. So we need to consider which option is best for us, and we need to use the option. So always we do the cost and benefit analysis, and we need to look around what is the business requirement. So that's why the long term asset, if we want to borrow money to buy a property, so property is a mortgage, we can get it. Mortgage is a long term loan. So that's what is the asset for a business. So we need to think about the asset, which if we don't buy it, we can't really do the business. So we need to make sure we'll get the long term loan, refund and pay back to our banks and financial institution to whom our creditors we bought it. So we need to make sure long term arrangement instead of overdraft. So that's all the cost and benefit we need to consider before making the decision. So cost we need to look around, and duration we need to look around. Okay. So next, I'm not sure is it readable or not. Is it readable, Dr.? So selecting source of finance, we need to look around the cost, we need to look around the duration, We need to look around the gearing. Gearing means the risk factor. Because if we can't afford it to pay back, so bank loan is very, very risky. So we need to make sure. So when we borrow the money from the bank, we need to consider the risk as well.
Mm-hmm.
Interest rate, we need to consider which one, how much interest rate and how much excess we have on file. Then we need to categorize them short-term financing, the bank loan for the short period of time, working capital is a running capital, how we'll manage our invoices. Like, we can make negotiation with the supplier to pay them in the later date, and we'll try to get the money quicker from the customer. So that will help us. And then we can look around the leasing. Leasing is mean two types of lease, finance lease. If we get the car on the finance lease and the day first logbook of the car will be on your name, so it means the day first the car will be yours. But if we are on the operating lease, it's like a rent you carry on paying. So in both cases, we need to look around the tax benefit. So if we'll get the finance lease, first year we can get capital allowance from HMRC. So first year maybe we don't need to pay any tax on our profits because with that money we can claim. And we need to look around what type of asset, is it any incentive available from HMRC in terms of the taxes or not. So all we need to consider, so which option is the best. So long-term finances, long-term source, like we earlier, it can be bank loan, it can be shares which we can issue, but we need to again need to look around the risk. Other is nowadays is called Islamic finance, which is based on sharing, like you investing in a property. If they earn the profit, you will earn the profit. If they have a loss, you have to bear the loss. So there is a no certain percentage. Your percentage of return can be go up or down, like a dividend. Dividend is not a fixed. It can be more, it can be less. So this is all about. So we need to make sure, when we make a decision, so we need to look around all these possible options. So we can categorize them debt financing, we can categorize them equity financing, and we can look around, hybrid convertible loan, the loan which we can convert it, like, we borrow money on the bond we issue, which bond can be converted again. We can give them again the shares, we can issue later date shares. So those sort of loans can be venture capital. Different venture capital companies, they come together and invest in various projects. We need to look around this type of capital is how much risk the proposal, like EDF electricity plant, atomic electricity. So various companies, they have a venture capital. They thinking due to the Brexit is still stop the project not ahead. So we need to think about, is it good that, and how much is the risk? Always we need to look around the probability, what are the chances of. So risk and reward we need to before deciding which option will go. Any question? Okay. Another source of we can raise the money, internal source of finance and the growth. We need to look around. If we are growing the company, maybe we can include the loan internally. We can sell some asset. If we have a retained profit, why retain profit? How long we can hold the profit? Retain profit mean the profit previous year we not really distribute between the shareholder. So that profit we can retain it, and it's help us to be boost our capital. Sales of asset. If we have asset in our control, some we can sell it and we can raise the finance. So that's called internal. External source of finance, long term normally maybe paid back after many years and not at all. Short term used to cover the fluctuation in the cash flow. That can be, we need to look around the growth generated by the acquisition. If we acquiring other companies, that well. So short term loans, what are the sources? Bank loan can be less than a year. Normally, we can call short term, or different company maybe different time period consider as a short term. Overdraft normally is for short period of time. Thus, we can use short-term financing facilities. It has own benefit to meet the short-term needs of the business, and we can raise the capital to meet the needs of the business. Credit, careful management of the trade credit policy we need to, if we will, that's why credit control department in our organization need to be very strong. So that will help. So if we have a quick receive money from and we can give the loan for the certain period of time, so that will help to boost the cash. And we can, our factory mean if we have different invoices and we can give to the factor company and they can give us money. So that's factoring we can use. We can sell our debt to someone and they can collect money from the customer, and that will help to boost the cash for the business. Any question? Next, leasing. Like earlier we said, two types: operating lease. So long-term loan can be, which we can debenture, is a fixed rate of return, like a piece of paper which is secured, can be against asset. We have a lot of asset, but we don't have a cash. We can issue debentures if we are listed in the stock exchange, and we can raise the finances, and we can pay, in after a certain period of time to lenders. So bank loan and mortgage is common also under the long term as well. So we need to look around the mortgage, normally not for a year, it can be for the long term. Mortgage can be two types. It can be the repaid or the just for the interest only mortgage. So those we can use tools to be raise the finance, but we need to look around the business need as a duration for how long we need. Merchant are the investment banks. Of course, those are can issue the under the underwrite raising finance, and under the different underwriting writers we can get the money. And different government grants can be maybe offer the loan for the certain project, and those we can use for the long-term purposes as well, like renewable investment scheme, like European Social Fund and various other schemes. Okay, any question? Next, now we're looking explain the reasons and process of budgetary control. So next we'll go through the budget and the budgetary control. So what is meant by budget? Hello, can we hear you? Okay, I'm saying we next we have the budget and budgetary control. So budgetary control. So we'll discuss budget. What is meant by the budget? Budget is a plan, financial plan, expressed prior to the budget period, and budget always will make for the future. So it can expand on implement, can be inflation, like we have inflation, we have a various other rates, so we need to look around. The budget is made. So one can be one budget type, zero-based budget. It means every time look, what are the variables, we starting everything. We're not looking at last year incremental budget, but we looking, that we starting everything estimate again. Any question? No. Okay, next looking, when we make a budget, always need to look around the strategy. As an organization, we want to expand our business or we want to be divest. Like, divest means we have some spare capacity, we want to sell it. What strategy we have? Do really we need to borrow more money from, or we can try to bring efficiencies to be use the cost instead of, or we need both, or which country we are going to be invest. All this we need to look around. Of course, strategy have an effect on the company, but so we need to make the budget according to the strategy. If our strategy to expand the business, action plan, and we need we get more money and we need to borrow more. Looking now, budgetary control is use of comprehensive system of budgeting to aid management in carrying out the function like planning, controlling coordination and controlling. And this system division of organization on the functional basis. Functions like department, those are the function are we call operational, like HR operation, like marketing operation, like after sales service. So these can be functional basis, and we can make the budget for them. Preparation of the separate budget for each center, like in school, in this organization, we have a different cost center. We can charge the cost. We can say this is business school, this is like a mechanical engineering school, and different sort of the budget can be. And the canteen budget, like we need to decide canteen everyone is using. If one department has more workers, so they should share their budget with the canteen, because canteen normally don't have a separate budget, because all department will getting it. The canteen is a service department. They provide services. So if we have a more employees in department, we need to be share more money to with the canteen, and we need to be a their cost. So different, So variance, we heard about variance. What is meant by variance? Any thought? Variance?
Different things that things that
Brilliant. So variance is
have
yes, good.
So in one department you might have a certain stuff, which you said, another you have more. So these are very
Okay, good. So that's called variance. So we need to look around the variance. So variance normally in business term, we can use the difference between the budgeted and actual. So the difference between the budgeted and actual is called the variance. Like you budget something, but actually you spend more, so variance will be adverse. If you budget the sale 100, so that budget will be in our favor. Yes, because always the higher sale is better than the lower sale. Okay, so now we looking classification of budget. How we can classify the budget? So according to the time, long-term budget, short-term budget, current budget, or rolling budget. Then according to the function, sale budget, production budget, cost budget, purchase budget, personnel budget. So these are all according to the function. Then according to the flexibility, we can say fixed budget or flex budget. Fixed budget means the budget will stay the same whole year, we're not changing it. The flex budget, the budget which carry on changing, if the inflation rate increase, we need more money. Yes, budget need to be more. If is a national minimum wage increase, which is now £8.21, so we need to be change our budget. Of course, we are by law we are bound to be pay more money to the workers, because according to the legislation. So we need to make sure. Capital budget. Capital, like one of lesson we discuss about difference between capital expenditure and revenue. Revenue is a day-to-day expense. Like, when we do painting, cleaning is a revenue expense. That goes in the profit and loss account, also known as the income statement. Capital expenditure, when we extend the house, that's your capital expenditure. The house value will increase. So this is called capital. So sometimes we need a capital expenditure, we need a loan, or we need to make a budget for the capital expenditure. So acquisition of the asset selected by the following factor: replacement of existing asset, purchase of additional asset, so installation and improve. So that's all we use capital expenditure, like extension, like in school new photocopier. So that will become under the capital expenditure. Okay. Master budget which is overall to the central government make the budget, that budget will be known as a master budget. The institution budget, overall budget, can be known as a master budget. Then we have a functional budget, like we discuss about sale budget, purchase budget, or departmental budget. So fixed budget, the budget will stay the same, it won't increase or decrease with the level of output, level of activity. If we have a more student, less student, our budget will stay the same. Any question?
no question.
Okay. Next, we're looking the budget. Budget promote forward thinking and identification of short-term problem if we have in our organization. Budget motivate managers. If you don't have a budget, so people will carry on spending money, whatever they want to spend. So that's why nowadays is called responsibility accounting is very popular subject. So when we are giving budget, you will be given the responsibility as well. So you will be responsible for budget. So all your performance will be measured against the budget. So if you're getting more money, you should be performance should be improved as well. So provide the basis of the system of control. So budget help us control. So we measure the performance budgeted against actual. So if the budgeted or actual performance is better than budgeted, variance will be our favor. So help coordinate with the various sections. So we can say what budget you got, what activity you have, what level of, if you're getting more budget you're supposed to be. So we can coordinate with the various section of the business. Provide a system of authorization. So budget is the responsible, someone is in the department is responsible authorization, what you need to buy, when you need to buy, how much we need to buy. So we can control. Any question? So 6 reasons for budgeting, planning. If we have a budget, we don't plan itself is a financial plan. Budget to improve the communication between departments. Budget help to motivate people, motivation. Budget help to organize the activity. Or is it my budget? It's not my budget. I don't have money. We can't recruit more staff. Yes, because all these controlling. Yes, budget help control. Planning and control all will work side by side. If you plan, you have a budget, but you don't have a control where the money being spent. So that's why the reporting is very important. The control always the variance comparison between budget and actual performance is very crucial. And then evaluation, we can do appraisal to evaluate the performance of the department. So we need to make sure that our performance will improve in our day. Then we can look around the 6 strategic plan, long project planning, short-term planning can be exchange facts and ideas can be pursuing the mean delegating the task and the role and responsibility and controlling stay and control of an action plan result and evaluation comparing budgeted result with actual result. So like in shape of variance, that is evaluation. Any question? So we can conclude budget is preparation of the budget is the first step in the budgetary control system. Implementation budget is the second phase. But the preparation and implementation of the budget will not achieve much unless the comparison is made regular between the actual performance and the budgetary performance. Continuous and proper reporting make this possible and ensure the success of the budgetary control system. Proper follow-up action has to be taken immediately for the report submitted. The two variants which we discussed earlier is the difference between the planned, budgeted, and the standard. As in respect of revenue, we spend how much money we spend, how much sales we made. So we need to make sure we compare between the budgeting what actually we have. So variance can be different types of material price variance. We bought a material where we set this how much material cost will be, but actually can be more or less. Then the usage can be more or less. Labor rate can be more or less what we budget, what actually we paid, because it's depend upon the supply. Like a nurses, we have a shortage. One of nurse being paid in one shift at around £2,500 for 1 8-hour shift, being paid £300 per hour. Because that's we need to look around, because sometimes we have shortage of, and we need to be that the usage of money will be more, the material that how much labor are supposed to take and how much we took it to complete the task. Fixed overhead variance, how much we budget the expenditure, how much overhead mean those are not direct expense but indirectly, like admin, like stationery, like various other, those are not directly involved in the activity, but indirectly those are part of like a marketing expense. Though directly is not linked with the production, but indirectly is the help, our business. Volume, we need to look around how much we produce, how much is the variance is favorable or not. efficiency, we need to look around is indirect labor is efficient or not. All this we need to look around under the variance, and we need to find the reason. Is it due to inflation? Is it due to the poor management, or due to the waste staff, or due to the agency staff, or various other reasons can be variance. Capacity, we need to look around how many hours we have, how many hours we use. We working up to capacity or not. Always good to be. We need to look around how well we utilize the hours to get budget. So we need to look around the variance in profit and loss. Can be caused of the different part of the budget. There are the most parts in sales, direct sales and indirect sales. Direct cost is the cost, which we can trace within a product, how much cost is. Indirect is the admin department, it can be IT department. Those are not directly involved in the production, but indirectly they have a significant role, like a back office, IT office, they provide us assistance. So that's why the indirect cost we need to look at. Okay, next we have 4.3. 4.3 are learning outcome assessment criteria, which we're supposed to go through the prepared cash budget. So cash budget is very, very important. Cash is the lifeblood for any business. If we don't have a cash, no business. So the cash budget give estimate, anticipated receipt, and the payment during the budget period. Cash budget makes the provision of the minimum cash balance we need to maintain in our organization. So we have when we're looking the cash budget, we need to look around the cash sales, receipt from the debtors, is mean our customers to whom we sold on credit goods, sales of fixed assets, receipt from interest, issue of new shares. So these are all the cash receipt and the cash payments. Cash purchase can be payment to creditors to whom we purchase earlier goods, like a suppliers, wages and salaries and bonus payment, overhead expenses, fixed assets, and we paid the dividend. All these will be decreased. So receipt will increase the cash and payment will decrease the cash. So next question, can we quickly read the question? I'll give you answers. So we have this company, they making the budget. They said the cash balance at the start of October we have a 15. We've been given the sale in July all months. We've been given the purchase, wages, salaries and sundry. We've been told that the 50% of the debtors, 50% of the sales we can receive end of first month and 50% in the end of second month. So if it's a £52,000 worth of the sale, so 26,500 26,000 will receive in the month of the sale, and 26 will receive in the following month. So we can manage the cash, yes. So we need to look around what our policy. So purchases, we 50% will pay in the month we say will purchase, but we will get 10% discount as well. So if we have a 25,000 our purchases, so 50% will be 12.5. Of 12.5, we need to pay 90% of this because we are getting 10% discount. Then the 50% remaining will pay in the following months. New equipment we bought in the certain months, then November, 35,000 will go out from the business. Wages are paid 1 week a year. So if we have 4 weeks in a month, so 3 weeks will pay in that month, 1 week will go in the next month. Okay, we need to prepare the budget. Any question? Okay. So what I did, I prepared the budget for you. So what we need to look around, I'll send you a separate template as well. So we need to look around we need to write this is the calculation, sales. All the sales we need to write under sales. Sorry, this sales, I put it other way around. Okay, that's the sales there, yes. So we need to look around which month we have sale. Then we need to look around the policy. Yes, 50% are, we can write all the figures across and we can fill the template. We can look around the purchases same way, policy, and then and the wages as well. Then we'll do under the payment, like how much we are paying in October, November and December for suppose last 3 months if we're preparing 3 months. So that's all the payments. So that's our total money supposed to go out from the business. So from the which we are receiving in April 54,200, but we take payment 85. So there is a short 31,690. Yes, closing balance is the negative. This one is closing, next month opening balance. Yes. So that's my opening balance. Then we have a receipt. Then my total balance and total minus total payment which we supposed to, and the difference still is a negative cash flow. And we need to make arrangements with the bank to arrange this money. Otherwise, we'll be out of the cash and we're not going to fulfill that requirement. So June, like we have starting again with the negative balance, then we have a receipt, then we have a total positive balance, and then we're supposed to pay 46,1, and you will see their end balance is 19,000. Still we are overdrawn. We need to make arrangement for the cash. So that's we need to look around the cash. In this way we can prepare the cash budget. Okay, so in the assignment we can add the examples that will help to be address the learning outcome. Any question? What I'm going to do, I'm going to okay, so today we learn about the budget and budgetary control. We discuss about working capital, sources of finance, and all which is LO4 we discussed today. So I'll just stop here and I'll go through the assignment very separately with you. Okay.